Hello, everyone. My name is Christian Kargl-Simard. I'm the CEO of Blue Moon Metals. For those that don't know me, I'm a metallurgical engineer. By training, I was an investment banker for 10 years. And over the last 10 years, I built up a company called Adventus Mining Corporation, which was a publicly traded company that decided to go into Ecuador in late 2017. We built a copper business in the country. We permitted for the first time a major mining project to international standards, and we sold that company to Silvercorp Metals last year for around $250 million. The main accomplishment at Adventus was to get those permits to become construction ready, and the main asset of Adventus, which is now Silvercorp, is one of the few copper projects that's currently in construction in the world today. So we fell short of building a base metal producing company, but now we view Blue Moon Metals as basically Adventus 2.0, and we've taken the best people and investors and board and put together that whole group, augmented with additional investors and people, and now we're off to the races building 2 mines already at Blue Moon Metals. So coming up to November 1st, 2025 is a 1-year anniversary of me joining Blue Moon, as well as Haitham Hoadley from Wheaton on the board and Maurice Belanger as our chair. Over this last almost a year, we've acquired 5 private companies to advance our business, and we have started construction in 2 mines. We've raised close to $140 million Canadian in equity and $140 million in project financing for Oaktree to finance one of our mines in Norway. Blue Moon Metals is a critical metals builder and operator. Those are our skill sets. Raising capital for building mines is also a major skill set. And we're focused on building critical metals businesses in the United States and Norway. These assets are first world, brownfield, and have most, if not all, the permits. So moving into what are our assets? So first and foremost, our main asset is called Nussir in northern Norway. It is permitted, it is under construction, and it is the only copper mine that the EU has given a special designation as a project of importance to the EU, and it also meets the EU values. The project was in production in the 1970s with regards to 4 open pits. That was a different mineralization than what we're chasing after today. We're going after sediment-hosted copper, a deposit that was delineated over the last 15 years. It's underground, but it does get to use some of the infrastructure that was in place back in the 70s, namely the processing plant building, the ports, and there's various barracks and other infrastructure on the project. That gives a very low capital cost intensity, and we expect to be in production after a final investment decision next year, but production Q3 to Q4 2027. When we went to Norway about a year ago for due diligence, we realized that the country was looking for new investors and open for business in mining and wanting critical metals mines. So we looked throughout the country for opportunities that had scale, that had most of the permits in place, and we found NSG, which historically was the largest copper mining district in Norway. We're currently cleaning out existing tunnels, and we'll extend those tunnels to allow for underground drilling and resource and reserve expansion. So those are our 2 Norwegian assets. Separately in the United States, and we see Norway and the US both in a similar position in terms of view on mining with the geopolitical events that are happening globally and the potential breakdown of supply chains, plus the unrest in particular on the border with Europe and the East. These countries have doubled down on focusing on mining and bringing back critical metals mining production and supply chain back to their countries. To that extent, we just started construction on the Blue Moon volcanic massive sulfide deposit in California near the Nevada border. It's very similar to Adriatic Metals, Vares, VMS that recently sold to Dundee Precious Metals for over $1 billion. We expect to have a mine ready for at least trucking ore out of the mine by the second half of 2027. The big announcement for the company occurred last week or kind of middle of October, and this was the announcement of the acquisition of the Springer Mill and Tungsten Resource. This mill is largely permitted as well as the mine. It's on private land. It has massive tailings capacity, excellent infrastructure in terms of road, rail, power, electricity. We can add a natural gas turbine as well. There's a natural gas pipeline to it. So we see it as a base for growth in the company, with this potentially the starter ore being the Blue Moon ore being transported from California. There's also a major tungsten resource. This operation used to be one of the largest tungsten mines in the United States. In fact, the processing plant has both a flotation mill for tungsten as well as an APT circuit, which is only one of two in North America, which allows for upgrading of tungsten concentrates. And overall, we see in due course both Blue Moon ores going through this milling complex, which is expandable, the tungsten mine likely coming into production over the coming years. And our growth strategy will be looking at other high-grade underground opportunities in the Western United States, where we can buy them, put them into production, truck them or rail them to Springer, and add additional processing lines, and in effect becoming a critical metals processing hub in the United States. All four of these projects have permits for at least underground mining. Springer and Nussir have permits for processing, and NSG, we do require permits for processing in due course. In Blue Moon, we have the permits to build a mine. If we execute on just putting Nussir into production and Blue Moon into production, I think we have $1 billion company, and we'll talk about that over the next few slides. But we do expect to have drill rigs on all four of these projects through 2026, and exploration will become a key part of the story going forward. The best part of all of this, though, is because of the brownfield nature of all four projects and the fact they should be first quartile cash costs, and there is limited to no royalty streams or debt. It has given us a blank sheet of paper to finance these projects into production efficiently. That should keep a very tight share structure, and the capital cost to put these into production is very reasonable. So by full year 2028, we expect to be producing around 40,000 tons per annum of copper equivalent, moving to 50. And I put this slide up here just to compare what that means in the context of the market. Both Adriatic Metals and MAC Copper were acquired earlier this year, either ramping up to around 40,000 tons per annum at first to second quartile or operating at that level. And both of these companies were acquired for over $1 billion US. So those are really good touch points on why I think we can get there just by executing on our business. In terms of breakdown or diving deeper into the assets, the majority of the capital costs to advance these projects over the next few years has just been funded, and we'll get into that over the next few slides. All of these projects have significant expansion potential in due course, but what we're looking for as investors and operators is for Nussir to be in production by the end of Q3 2027. We're currently advancing the underground decline to the ore body. We should be there in the first quarter of next year. And we're starting to order long lead items towards the construction of the process plant after a final investment decision in the first to second quarter of next year. Initial production will be around 20,000 tons per annum of copper equivalent. Relatively small mine, but we think at that rate, the mine life is 50 to 100 years. The Blue Moon mine integrated with Springer as a potential scenario could see us in production in the second half of 2027. We're currently advancing the decline at Blue Moon in California. We'll do test mining, additional metallurgical work, and look at what an integration with Springer, a mill across the board in Nevada, may look like, as well as we're looking at the tungsten opportunity that remains at Springer as well. Just on Blue Moon, though, we're looking also at 20,000 tons per annum of copper equivalent production, and the current mine life would be 10 to 12 years based on known resources and reserves. NSG, we will be extending existing mining tunnels and drilling off the resources and looking to expand them with a target of 30 to 50 million tons of volcanic massive sulfide resources over the next 2 to 3 years. We have a modest target of 10,000 tons per annum of copper equivalent production starting in the 2030s. Management and board, so we have a very strong young team that have each constructed, operated, financed multiple mines around the world. There's some other individuals that are not mentioned here that will be shortly that have been added to the team, but we've built it up so we can be a multi-asset, multi-jurisdictional producer. Our board is chaired by Maurice Bélanger, who recently successfully, as chair and CEO, completed the construction of Côté Lake. And prior to that, she was the president and CEO of Atlantic Gold, which was a huge success in Canada. Haytham Hoadley is the president of Wheaton Precious Metals, which is a $60 to $70 billion company. Francis Johnston represents the fund Baker Steel, which is one of our largest institutions, and Karen is a well-known Norwegian. We recently closed an $86 million equity financing, primarily from U.S. investors. So that gives us a substantial capital to advance our businesses through 2026 and into 2027. Most of the equity proceeds was for the United States, and we're financed with a $140 million project financing with Hartree and Oaktree to advance the Nussir asset in Norway. So you're looking at a market cap of about 200 million US on the basis of 80.8 million shares outstanding. No warrants, enterprise value of 125 million. And if you look at our shareholders, about a third are wealthy Norwegians, a third are US-based investors, and a third other. With the significant push in the United States and the recent equity financing, we are working on a listing on the Nasdaq by April 2026, and we think that can substantially increase the liquidity of our shares. Also notable on our register, we have Wheaton Precious Metals and Altius Minerals, two prior major shareholders of Adventus, as well as in the retail we have Ross Beatty and his fans in Switzerland as well. The $140 million package with Oaktree Hartree was announced in August. There were 10 groups vying for this package, cumulative interest of $1.2 billion. Why we liked going with Hartree and Oaktree? Well, they're already equity holders. They're going to become 19.9% equity holders. They were very familiar with the project and were the quickest to move and provide us with capital. The stream side of things we also like is called a hybrid package, managing debt and a stream. It gives less financial pressure on the company as we ramp up to production. But the stream drops down by 50% once we mine the reserves in the project. And then there's a buyback right of 50% of the stream as well, which ultimately, if both happen, would leave an encumbrance on a stream of less than 5% of the revenues of the project. Strategic shareholders, we have two SAMI-operated businesses that are operating on site, both L&S, which is a mining contractor, and Wergerland. And then we have two long-term strategic shareholders in Oaktree, Hartree, and Wheaton that we see as funders to help us acquire additional assets and put them into production going forward. Norway we see as a resource superpower. They were one of the poorer countries in Europe in the 1960s and now one of the richest. And they've done that from building out oil and gas, smelting, electricity generation, forestry, and aquaculture. The only thing left to round out those businesses is critical metals mining. The smelters in Norway, many of them are producing the precursor materials for batteries, electric vehicle batteries. They're building out the manufacturing capabilities. Norway is the first country in the world to ban internal combustion engines, but they have no critical metals mines. So it's just natural for us to start building out that capacity in the country. So jumping into Nussir, we're building on the basis of a 2023 feasibility study, JORC compliant. We're a Canadian company, so we cannot publish that. But Worley is currently completing a 43-101 feasibility study that will be out in February of next year. We're the only copper project in the world to be recognized as an EU strategic asset under the Critical Raw Materials Act. The benefits of that, of course, is an endorsement to the Norwegian government for a project that Europe wants, but it also is also supposed to provide us with cheaper capital. We're fully financed, and to fast track permits, and we have all of our permits. Overall, it's, like I said, a key endorsement, but the product that we produce is a 45% copper concentrate. It's probably one of the cleanest on the planet, and it will be processed at smelters in Europe. We are very far north in Norway, but Norway all throughout has significant infrastructure. We benefit from all renewable energy, and current power rates are 1 to 2 cents a kilowatt hour. The resource at Nussir, the underground mine that we're going to be chasing after, is about 60 million tons at 1.2 to 1.3% copper equivalent net of recovery. This is bulk, low-cost underground mining with phenomenal infrastructure and right on the Atlantic Ocean. Earlier on, I mentioned open pit mining occurred back in the 1970s. This was this cluster over here. The Nussir body is brand new. It's never been mined before. It's been drilled for 10 kilometers and is open on both sides, and most importantly, open at depth. And we'll go into this on this slide. So in February, the decline will intercept the ore body around the 280 meter level on this side of the 10-kilometer strike. The red are reserves, the gray are inferred. The ore body goes from surface, and the 60 million tons of surface, to about 280 meters. By the nature of sediment-hosted copper, it's very consistent, and it normally continues to great depths and lengths. Only 5 drill holes drilled to date under 700 meters. All 5 hit ore grade mineralization where expected. The deepest hole was drilled at 1.1 kilometer depth, hit 9.7 meters of 1.6% copper equivalent net of recovery. Interestingly, PGE numbers are increasing at depth as well. And we currently have a drill rig that has started drilling in the center of this deposit, a directional drill rig that is going to look to expand potential high-grade resources at depth here. Now, moving on to Blue Moon, we are in Mariposa County, California, one of the poorer counties in California, on the border with Nevada. This is a very red state. We have very strong support from our county, from all supervisory board members, and very strong support from our Congressman, Tom McClintock, who is sitting on a subcommittee of natural resources in the U.S. Congress. This project had production off and on 40s and 50s, and we've come back here 80 years later to restart activities at site and to go after this current 8 million short tons of about 13% zinc equivalent net of recovery. There's a much higher grade core within this, around 3 to 4 million tons of well over 20% zinc equivalent. And at current metals pricing, the value per ton of rock is somewhere between $600 to $700 US. That definitely can transport. And at current metal prices, the mix between critical metals and precious metals is around 50-50. We just started underground mine development. The slot cut has been blasted, and we are advancing the decline with an expected group of 15 to 20 analyst investors come the first week of November in 2025. From a permitting perspective, we are permitted to construct the underground mine and to do the test mining, metallurgical work, and exploration drilling underground. We have several options in terms of transport. We could take our ore to the Stockton port, about 80 miles away, which is a deep water port in the middle of California, and ship it out of the United States. Or more interestingly, we've been looking at processing options in the United States. And the Springer mill, which is up here with my cursor, is potentially a very good site for processing ore in 2027. Just a comparison of VMSs, or volcanic massive sulfide deposits, that are have some traction in the markets overall. The Blue Moon has 4 assets, of course, at this point. So this is one of 4 assets. Our peers generally only have 1 asset. And if you look at this, we are about the second smallest market cap, but we're permitted. Most of these are not permitted, and we would have the highest grade of the peer group as well. Springer. So this is our new acquisition in the middle of October. This milling and mining facility is almost all on private land. We gather the replacement value of all of this is 300 to 400 million US. General Electric in late 70s, early 80s invested substantial capital into all these facilities, including the construction of the APT plant. They ran it for about a year before tungsten prices collapsed. And since then, this has been a preserved site. The vending machines still have snacks and drinks from decades ago. The maintenance facility still has the spares from 1982. I've never seen anything like it. So it's been very well preserved with all the substantial infrastructure you need to restart operations here, but also expand. It comes with a historical resource of 2.4 million tons at 0.5% tungsten. That is a good grade. If you go back to the historical resources of General Electric in the 1980s, they had 10 million tons at 0.5% tungsten. To put in perspective, Almonty, which is a Canadian-listed tungsten producer, has a reserve of about 8 million tons at 0.5%, is in operation, and is a $2.4 billion market cap. That is all forward-looking. We do need to do the work on the tungsten. We bought this more for the processing capacity, but I think it's interesting, especially with the APT circuit and other tungsten resources in Nevada without processing options. Where are we? We are about a 2-hour drive on the I-80 from Reno. You pass by a Florida Canyon mine of Integra right before it, near the town of Winnemucca. So this is mining central. Our focus is the processing facility, how we can utilize it to process high-grade underground ores, perhaps a Blue Moon in California, perhaps an additional acquisition or 2, perhaps tungsten. I think all of that eventually could be processed here, so multiple processing lines at the same time. There's a Union Pacific 2-mile siding right near the Springer mine. Union Pacific is also near Blue Moon in California as well. So if we did move the Blue Moon ores, it could be a combination of truck, rail, truck, or just truck. The processing plant has a flotation mill and an APT plant. We can modify the flotation mill quite easily for Blue Moon ores. The flotation mill is sized at 1,200 tons per day for very hard tungsten ores. The Blue Moon ore is extremely soft, and we think if the Blue Moon ore went through the mill, we could run it at 1,500 tons per day. And we'll keep the APT plant as is. That's significant optionality. It comes with an autoclave and complicated reagent circuits. We can, if we're processing the Blue Moon ores, we can always add another flotation circuit for the tungsten and then use the APT plant on the back end. The only North American tungsten smelter is located 120 miles away, so that's further optionality for us. The next steps on tungsten are to review the historical drilling and the resource and to determine an appropriate drill plan for drills to start drilling in 2026. And in terms of acquisitions, we're looking for high-grade underground mines that we can permit fairly easily with $400 to $700 per ton ore, and it will look like we're thinking about Blue Moon to truck or rail the ore to Springer and add additional processing circuits. Finally, NSG, this district had historical production of 26 million tons at 2.2% copper equivalent. There exists currently a 17 million ton resource at 1.1% copper equivalent net of recovery. That is made up of 3 underground mines, the most important one being Roopsee, which is about half of the resource base. This tunnel exists halfway through the section. We're currently cleaning that tunnel and we'll start mining shortly to extend this tunnel and drill off this resource, which is open in all directions from underground. Some of the historical high-grade hits from this resource you can see here: 10 meters of 8% copper, 72 meters of 2.1% copper. Generally, these intercepts also should have gold and silver, but they weren't assayed readily or routinely enough. Over the next 2 to 3 years, as we drill off the district, we will determine if this is a 10 million ton, 2% copper equivalent mine or a 30 million ton, 1.2% copper equivalent mine, and that will determine our development plans going forward. And finally, this is a brand new company, super exciting, new assets to the market, all of this put together in less than a year. Currently, it's all about execution, looking to put Blue Moon and Nussir into production, generating cash flow by the end of 2027. Exploration will come next year. We think all of these projects will expand substantially, and it will really round out the story with development and exploration. We're fully funded to do everything we need to through 2026 and into 2027. And key milestones around the 4 projects would be in Nussir, make a final investment decision in the first half of 2026 on the back of the feasibility study and ordering long lead items. At Blue Moon is to continue to develop of the underground exploration ramp, and we'll have a combination of test mining, metallurgy. We think we can bring in elements such as barite, germanium, and gallium into the resource, for example, and see how we can integrate Blue Moon with Springer. With Springer, it is evaluation of the hub and spoke model, potential additional acquisitions in that strategy, and evaluating the tungsten potential, including starting drilling on the tungsten. And then NSG is the start of underground mining and the installation of a drill rig underground later this year. With our current internal model, are trading at around 0.2 times NAV. Our peer group, such as Firefly and Develop, are trading at 0.5 to 0.6 times. So we think with this very unique story and marrying construction with exploration, we have a chance to re-rate to that peer group multiple through 2026. Over to you, Jasper.
First of all, great presentation. So could you tell us a little bit more about yourself and your adventure, your journey into mining and journey into what journey with Adventus?
Yeah, metallurgical engineer out of UBC. Did that for a few years. I think I learned that I like the finance corporate aspect of the business better than designing pipe elbows. So I was an investment banker for 10 years in Toronto, all in mining. One of my best clients was Altius Minerals, who, of course, is a shareholder of Blue Moon, but also was at Adventus. And Brian Dalton there suggested that I leave investment banking to start a mining company. So I left in December 2016 to do so. We had some money, and the business plan was to acquire a business somewhere in the world to build a base metals company. And so late 2017, we decided to pivot into Ecuador. As I mentioned in my introduction, we built a copper business there. We permitted the mine. That mine is in construction. And now I find myself here. So, an interesting journey between technical and finance. I like, running a mining company, and my main goal in my career is to build a proper mining company and see over the next 10 to 15 years if we can build the next Capstone or Lundin Mining, or that type of company.
So how many shares and incentive units do you hold of Blue Moon, and how important is it to your net worth?
It was very important. I hold about 700,000 shares. My average price is called $2.50 to $3 a share. So I put real money into that. That's between $1 to $1.5 million, I believe, or more. And then I have 100,000 options in the company. So I hope this becomes a $15, $20 a share company, and then I can retire. So very meaningful for me.
I mean, you have essentially assembled a team from Adventus, which I think quite a few viewers will know of, with some additions. So, would you say that you now have the ability to build and operate mines? What areas would you like to strengthen yourself in? Strengthen the team in?
You could say that the best part of this company is the team, the officer team that we put together. They're all very motivated, quite young for what they've achieved, and they're self-starters. We have now filled the positions below them, so-called the first tier below them, and now we're busy building the second and third tiers. So we're actually out to hire 30 people right now. The biggest impediment to growing this business is finding good people in all levels of the company. So finding those next 30 people is going to be a very important. Heavy hiring in the U.S. right now, but also to bolster the finance team in Toronto and some positions in Norway as well.
So, could you tell us a little bit about the history of Blue Moon, and also, I mean, you got in essentially a year and a few months ago. And how did you get to where you are today?
Blue Moon is a public company that's been around for quite some time. The Blue Moon asset, I mentioned, we're finally on the ground doing work 80 years after mining had ceased. But our chair, Maurice Bélanger, in 1989 completed a pre-feasibility study on the project for Westman Resources. Westman was acquired by Boliden. Boliden had reserves on this project in the early 1990s, but left the international sphere to focus on Scandinavia around that time. These assets then Blue Moon found itself in Lac Minerals. Lac Minerals was acquired by Barrick, and then the Blue Moon mine was taken out of Barrick by an entrepreneur, Harlan Mead, who's now passed away. Harlan picked up 3 assets from Barrick. He focused on the first 2, which were zinc assets in the Yukon, and was going to come to Blue Moon next, and he got sick and passed away. So Blue Moon kind of sat there for a number of years without much activity on it. And so you can say that our activities over the last 6 to 9 months are the first significant progress on the project for 35 years.
And you essentially, since you came in, you acquired the 2 Norwegian assets. How much did that cost?
Yeah, so we were asked by the CEO of Blue Moon, or I was asked if I want to take over the company, and I asked Maurice, our potential chair, do you like the asset? She told me about the history. She said yes. So there was a AGM, basically a friendly takeover of the company through an AGM that occurred around this time last year. And then I came into the chair or the CEO position November 1st of 2024. At the time, we didn't really know the permitting timeline or path in California. And we wanted to build a critical metals mining company. So the three of us, Maurice Hatham and I, we started brainstorming opportunities, in particular looking for shovel-ready projects that could jumpstart the company, bring in the team, bring in the shareholders. We came up with Nussir project as one of the opportunities. A year ago today, I was in Norway looking at Nussir, talking with the Norwegian government and all the stakeholders. And as you say, come the end of November 2024, we had announced the acquisition of Nussir and NSG as two private arm length companies, and we were required to raise a minimum of $30 million. The stock was halted. We completed all those transactions and one more to bring in some of the infrastructure Nussir. Those all closed March 2025. We started trading in the second half of March 2025, and by the middle of April 2025, we had the permit to build a test mine at Blue Moon. So that was over a year quicker than expected in California. Now we have a quid pro quo to build two mines, hence what we're doing today.
Could you add some color on your largest shareholder, Monial? You went through all your shareholders, but it would be good to get some more color on them. They own 10%.
Yes, since we acquired three Norwegian private businesses and exchanged them largely for shares in Blue Moon, we inherited a significant Norwegian shareholder base. When we started trading in March, it was well over 50%, and now that's a third. Monial is the largest of that group. They're a family office in Oslo, a billion-dollar family office, and they've remained quite supportive of what we're doing. The second largest investor out of those three transactions is Baker Steel, really the only notable non-Norwegian investor out of that group, and they put additional money into the company. And then the third largest investor is the Wergeland Group of Norway. They're an entrepreneurial group from Bergen, who own the industrial facilities that we picked up for Nussir. All of them, very important shareholders for us going forward.
Perfect. And are all of them, essentially, could you add some color besides obviously the financial gain from the share appreciation? Do any of the shareholders have other sort of?
So, Wergeland Group, we've signed a deal with them where they lease the aggregate mine that is at Nussir. So there's open pit mining that's occurring. They're using the port facilities. They've been there for about 20 years, and so know how to operate in the region. They also buy our waste from the underground mine, and they produce aggregate from our waste and sell it off. And they also have the ability to act as a contractor in many ways, which they're doing on our project. Another major shareholder that came out of the mix, and I mentioned in the presentation, is LNS. They're a top-notch mining contractor that's based in northern Norway, so it's a Norwegian workforce. They're a mining contractor, but also a significant shareholder, and they have the contract not only to build the Nussir mine, but to operate the mine for the next 10 years.
Some shares are still held in escrow from the Nussir and NSG acquisitions. How many are still held, and what's the release schedule of them?
Yes, all the Norwegian transactions resulted in an 18-month escrow release period. There have been 2 releases so far. There's 2 more to go. One will be, or the last one was at the beginning of September. So then the next one would come 6 months after that, and then 12 months after that. I believe it's approximately 17 million shares left to go. From what I can tell, there's been minimal selling from the half that has been released. Like, we're talking hundreds of thousands of shares, and everyone I've spoken to are there for the long term.
So just did this, 86.5 million Canadian dollar financing and gross proceeds raised. What type of shareholders took part in the financing?
Yeah, this was a institutional raise to advance primarily our U.S. business. The book was in the 60% range U.S. investors, about 20-25% Canadian, and the rest international. And the key lead orders were 5 what I call blue chip US funds. That some of them were in Ventus, and I would expect them to be supporting us on future fundraisings.
What's your current average trading volume?
Prior to the fundraising announcement, I think it was around the third week of September, we were trading 150 to 200,000 Canadian a day. And now since then, which is over 3 weeks, we're trading about $1 million a day. We had a 7 million, a 6 million, a 5 million share trading day. So liquidity seems to be good going forward, but we will additionally bolster that by the Nasdaq listing, which we expect by April of next year.
Do you think the majority of your trading by then, when you list on Nasdaq, should be on Nasdaq? And what's the associated cost with that? Or, I mean, is it a significant cost?
Yeah, we think it's about an extra 500,000 Canadian a year to list on Nasdaq and to have all the legal, insurance, trading aspects. Nasdaq has shown us some materials that the average company that lists on the Nasdaq without an equity financing, which is what we would be planning to do, the trading increases by 10 times.
Okay, and all in all, so if we go to the financial position, you have, I said, 81.5 million USD in cash, 12.5 in debt. It's a bridge loan. And so is it fair to say that you have 12.5 million left on the bridge loan?
Correct.
And then you have 15 million in equity investments from Oak Tree and Hard Tree, as well as 50 million in debt as a term loan, and also 70 million as a precious metal stream. Is there any other liquidity sources that I'm missing?
No. The current cash plus undrawn from Oak Tree and Hard Tree is approximately 200 million US. LNS has to put in a couple $1 million more money if equity, 10 months after the start of construction. So that would be first quarter next year. But that's it.
Okay, and then how much is that from LNS?
About $2 million at market.
Okay, at market. And that 15 million USD from Oak Tree and Hard Tree that's left, how much is in equity investments? How much is, how is the price set? What expected timing?
Yeah, that is at market, and that would be in tandem with the drawdown on the stream.
Okay. But so in other words, 15 million, then you have 50 plus 70, and then you have the term loan, not term, the bridge loan. That should be 147.5 million USD in liquidity that's available. Plus also the LNS. Is that fair?
Plus our cash.
Yeah, plus the cash. So yeah, and then you have the cash.
About
Yes.
200 million that is available US to us. To be fully funded with all the activities, not setting aside any acquisitions we might make in the tungsten mine opportunity, we probably raise another 50 million US to the end of 2027. But we have lots of options there. All 4 of our projects have limited to no royalties, but they're first quartile cash cost. So we could pull that off today if we wanted, like a 1 to 2% royalty sale on the various assets easily gets $50 million. The closer to get to production, that's worth more, of course. We have multiple corporates that are looking to give us capital. Well, 3 that we're talking to for various reasons. So you could sell 9.9 to 19.9% of the company, potentially at a premium.
I was talking larger mining companies. Yes. Here, or investment companies?
Larger mining companies. That's probably where the next capital comes in, is from a major mining company and or a royalty deal. But we have lots of runway.
Why? No, definitely. But why do you think a larger mining company would invest in you? When, not to say that there's a lot of value here, but all of your mines are smaller mines that larger mining companies probably wouldn't look to acquire in the future.
Nussir, we have 60 million tons, but if you extrapolate 60 million tons in the first 280 meters down to 1.1 kilometer depth, you have 200 million tons. it's open in both sides, and at depth, there's no reason why it can't be even larger. And at that size, it's of interest to any mining company. So that's one aspect. The U.S. critical metals growth strategy, while the individual mines that we're talking about are not that significant, if you aggregate 3 or 4 mines providing ore to a central processing facility producing copper con, zinc con, tungsten con, you name it, antimony, that becomes very interesting. That becomes a substantial and strategic business unit, and people find that very interesting. Our U.S. products do not have an offtake on it. I think zinc may become quite interesting over the next few years as Red Dog comes off. There's an extreme shortage of zinc concentrate actually right now. And let's not forget, as another source of capital, the U.S. government and this U.S. strategy. The U.S. government has been giving grants to a number of projects that are very early stage. They have no plans or kind of path to processing or permits anytime soon. Our plan with kind of looking at partnering with the U.S. government is to acquire at least one other project for the hub and spoke model, properly position the tungsten resource and asset, like what is it? What is the timeline that we could actually put it back in production? And then you have Blue Moon ores, you've got the tungsten opportunity and this other thing, plus the processing facility. Put it all in a nice bow and talk to the U.S. government. And we plan to do that next year.
Okay, so essentially that's well, first of all, starting off with grants. So that if you is it specifically grants that you're after, or other sources of what are there any other sources of funding that could be attracted from the U.S. government?
Well, it could be a source of the $50 million, of course. But I don't mind this 10% stake that the government has taken in Trilogy and in the Thacker Pass company. We are actual miners doing stuff and focused on getting metals and minerals produced in the U.S. in as quick as time frame as possible. I don't know another peer that is doing that at this pace. And if you add in the potential barite out of Blue Moon and what we think is high germanium and gallium values out of that ore, we're covering a huge part of the needs in that like super critical list of materials that the U.S. is looking for and that China has banned. So we'll see. But remember as well, we have our largest shareholder is Oaktree. Oaktree is one of the top 5 largest asset managers in the U.S. They're very plugged in. So that is naturally a key ally that we'll lean on when we're ready.
And okay, but essentially potential funding from the U.S. government, that's sometime next year, Q2, mid next year, if perhaps.
No,
you never know with governments, but if something happens,
our plan is to seriously sit down with the U.S. government next year at some time, and we'll see where that goes.
Okay, awesome. Okay, and that 50 million US that's sort of left, is that to get first of all get Nussir into production? It's also enough to get refurbish the mill so it can process the Blue Moon ore and also get going with the mining. Essentially get Blue Moon into production.
Yeah, the extra 50 million is meant to have working capital, put the 2 mines into production, allow for exploration, etc. So it's we're doing a lot at one time. I wouldn't just partition it to a single asset. It's to
no. Okay, I meant that's what you need. What additional funding for the next 2 years, essentially, if you don't acquire anything else or.
Correct.
Yeah. Okay, that's good. Obviously you have quite some alternatives there. Do you think? Do you think you would act sooner or later on securing that funding?
No, we just did our big funding push. We're trading at the financing price despite the acquisition of Springer. We are the cheapest we ever have been with the acquisition of Springer. So there's no immediate push here. I would say second half next year would be maybe when we look at this, and or if we re-rate substantially earlier. But my focus right now is hiring the people that we need to execute on the business, to add at least one really neat asset to add to the hub and spoke model, and to complete all of the definitive agreements that are outstanding with Oaktree, Hartree, Springer, etc. That is, and to list on the Nasdaq. That is full up all management team to second quarter next year to achieve all of that. We're not focusing on any additional financing activities for the foreseeable future.
Okay, that's good to know. And so, what is your current G&A spend if you include landholding costs, and how do you expect that to change going forward?
Landholding costs for a project is negligible. Think of it as nothing to hold these assets, which is very different than Ecuador, where we spent millions of dollars a year to hold assets. G&A is rapidly ramping up as we build a team. We're going from $2 million to $4 to $5 million a year over the next 12 months.
US.
Canadian.
Okay, that's good. Okay, so regarding, I mean, what's the maturity for the term loan, and what documentation and milestones are needed to get payouts from the term loan and the streaming agreement?
Term loan, I believe, is 6.5 years, which is more than enough. The main checkbox for drawdown of the remaining facilities is the completion of the feasibility study, which will be done in February, satisfactory to Oaktree, and we would look to do the draw on the stream and the additional equity coming in at the end of March of 2026.
Do you draw everything down at once, or is it?
No, that's over 18-month period, 15-month period.
But you essentially need a feasibility study and start make a final investment decision. And then
everything else is in place.
And does that money specifically have to go to Nussir, or is there indifferent
if it goes to
Nussir? Okay, it's for Nussir. Okay, that's good. Also, by the way, what's the terms for the bridge loan, and when do you expect to repay, or how do you expect to deal with that?
The bridge loan is 2 years. The terms are on the slide in the presentation. I don't have it in front of me right now, but they're very clearly laid out. The bridge loan, it will convert into the stream, be taken out by the stream. The bridge loan can be repaid at any time as well, but the equity that was provided on the bridge is meant to allow us to complete all the steps to draw on the stream and the term loan, and show a fully funded package in advance of doing equity in the fall, which we did, of course. So there was a strategic timing to all of these things. The definitive agreements are quite complex; they take more time. And so that's what's underway right now.
Okay, and that's expected to be announced later this year or early next year?
The definitive agreements should be completed by the end of this year, subject to achieving all the conditions precedent, which is, as I said, the only thing outstanding is the feasibility study. So we should be ready in March to draw the full package.
And what does it mean that the bridge loan will be converted into the stream? Will the stream get bigger, or what's...
No, the bridge, it's 20 million of equity, 50 million in a term loan, and 70 million in a stream. So the 70 plus the 50, 120 million is call it the long-term facility. That long-term facility takes out the $25 million bridge. It's replaced.
Okay, so it get into the 70 million or no 50 million exactly of debt.
So when we draw on the stream in March, so 70 million, the proceeds to us if we don't draw on the second 12.5 million is going to be 58.5 million,
Okay, so you'll have
57.5
58.5 million available. Okay.
57.5 million.
57.5 million available. Okay, that's fair. So that bridge will essentially get, converted. It will
gets
be gone. Yeah,
replaced. Yeah.
yeah, it could be replaced. Okay, and in the meantime, I mean, I guess you don't expect to really draw on the bridge loan.
No, we don't expect to draw on the second 12.5 million. We don't need that.
Okay, that's good to know. And could you remind what was the drop down clause for the streaming agreement?
The dropped so the stream has the 50% buyback, has the 50% drop down once the reserves are produced. But we've also added a clause in there that if we look to do a significant expansion at Nussir, Oaktree, Hartree have to participate in 50% of the capital to do so. Otherwise, their effective exposure to the stream stays the same, or depending on how you look at it, drops down or stays the same. They have to contribute in order to stay with the additional pro
If they
rata.
want to remain, I think it was 70% gold and 75% silver.
They have to participate at 50% of the capital cost to stay pro rata on any expansion.
Okay. And what's the buyback set at, and when can you do it?
Yeah, we can do it starting in year 4 from production based on a 18.5% return at that point.
Okay, I think that essentially covers the money part. So let's get into before we go move into Nussir and Blue Moon. I would like to speak a little bit about mining jurisdictions, because obviously when you as an investor here, California and Norway, that doesn't sound very good on paper at least. So first of all, but let's clarify: Nussir and Blue Moon, both those are fully permitted to go into production, given that you don't build a mill at Blue Moon, that you toll mill it.
Yes.
Okay, that's good. So that's fully permitted beyond, there are no more repeat.
Nussir is fully permitted, subject to minor secondary permits that you'd only get a few months before you start production, like toilets and stuff like that. In the case of Blue Moon, we're permitted to build this test mine. There's some minor modifications that we need in order to ship ore out of the mine, but effectively you're done building a mine once you're done the test mine. And those are contemplated to be set with the BLM.
Yeah, I mean, I guess you covered. I mean, operating in these jurisdictions are quite workable.
They're excellent. Operating both are excellent. They're practical people. They want mining. There's good contractors. Lots of infrastructure, lots of pretty easy logistically and with accommodation. So much easier than Ecuador.
That's good. And I mean, how's the support from municipalities and local communities at both Blue Moon and Nussir? And you can speak for NSD if you want to.
I would characterize somewhere between 10 out of 10 and 11 out of 10 on all three.
Yeah, that's good. But I mean, obviously at Nussir there's some, maybe not local opposition, but as at least opposition from environmentalists because of submarine tailings. What can you tell us about that, and how are you handling it?
Yeah, submarine tailings. Not everyone knows about it. I can see kind of initial knee-jerk reaction, but they are way better than land tailings under certain circumstances. So British Columbia, Greenland, Norway, Indonesia have fjords, kind of deep sea next to the land, where it's, in my opinion, more practical to deposit your tailings on the seafloor than the land. If you think about land tailings, first of all, you deposit tailings on a large piece of land that will never be recovered. You've basically destroyed that environment. You can plant things on top of tailings perhaps in the future, maybe, but you're destroying the land where the tailings go on. In the case of submarine tailings, you're depositing a thin layer. If you do it right, you're depositing a thin layer of your tailings, and yes, you're the kind of the small microorganisms that are on the surface of the sea level are wiped out when you do that, but they come back almost immediately after the tailings have been deposited. So your submarine ecosystem gets returned to almost pristine nature very quickly. That does not happen on the surface. On the surface, you're subject to acid rock drainage, depending on the ore type. You do not have that issue under the water. On the surface, you're subject to weather, earthquakes, other types of acts of God that can have catastrophic outcomes. You do not have that on the bottom of the seafloor, especially because you're putting the tailings in the area where there is little to no current. And these tailings are being deposited at 100 plus meters. Your fish is in the top 5 meters, like your salmon, your cod, maybe 30 meters, your king crab, your lobster, 50 meters. There's no fish life down 100 plus meters. They're just those small microorganisms. Beautiful thing as well with Nussir is that you're getting near 100% recovery of all of the metals. So what's left is sandy kind of gang materials, which seize up into like concrete form and encapsulate itself at the bottom of the seafloor. So again, no issue in terms of leaching. Any leaching of copper that might take place, all that test work's been done. That's going to be way lower than the background concentration. I think it's super elegant, and we have multiple NGOs that are very supportive of this scientific approach and sea tailings. But there's a few that are against it, and we just need to work through that. Everyone is allowed to have their opinions, but from a scientific perspective, it is the best approach. And in Norway, they believe that. I believe there's 8 or 9 mines that operate using sea tailings or have operated using sea tailings. It is the base case, and it is the base case because it is much safer to do than to be putting it on land.
But essentially, would you characterize that there's more position from environmentalists than actual local community? How's the you have a town nearby.
The local towns, the municipality is extremely supportive. Extremely supportive. Most of the people against sea tailings would be some NGOs out of Oslo. They don't live in the area. They're against all natural resources development projects. It's not only just mining. It's not just sea tailings. They're fundamentally opposed.
But so, could you also outline the permitting process for NSG? When do you initiate it, and how long is it? What's milestones to look out for?
So at NSG, we can extend these underground tunnels and drill underground. That's a multi-year process. We have the exploitation permits. What we need is pollution permits, effectively. So how we deal with the tailings from in the NSG area. We have the land and the old mill buildings that we can purchase from the municipality for next to nothing. We have a very supportive municipality. They want mining to come back. That's all they've seen. It's high unemployment. And so they're going to help us in any which way to get back into production. The timeline for the pollution permits, I would expect, is a few years. Once we're ready with the scope of the project, come say 2028.
Let's move to Nussir. So you own 93.55% of Nussir. Who holds the remainder?
It is a Russian individual that has been stuck with the sanctions on Russians and Russian bank accounts. We are working on trying to do a squeeze out. There is a way to do it. You have to go through, understand Brussels, but it's underway. The person wants to sell.
The government royalty, 0.75%. What other royalties are there on it?
That's it. 0.5 to the government, 0.25% to the Sami.
And so I guess what most investors probably are wondering is why was this asset sold when it was so close to construction and it wasn't sold for much, 55 million USD, give or take.
Yeah, there was a full sale process, lots of interested parties. Overall, it's a small initial production, which doesn't really get the excitement of base metal producers. The base metal producers that are out there are typically looking for production and much larger. So we bought it as a result, and the private company had basically hit a wall in terms of being able to fund the advancement of the asset. That wasn't really their skill set, nor building mines. So they've passed the baton to us to raise the capital and make a more robust kind of plan for development and bring the people in.
I guess first of all, what's the timing of the feasibility study?
February.
February. And what do you expect to change with the feasibility compared to the JOR compliant feasibility study from 2023?
Well, we have not been able to put any materials out in the JORC feasibility study because we're a Canadian company. We've got to adhere to 43101. So really, I see it as a marketing document. So we can actually put numbers and designs and those kind of things out, and the precursor to draw on the project financing facility. Otherwise, I wouldn't be putting out the study.
So there's no major changes in the flow sheet or anything really in terms of throughput or mining methods?
It's generally the same. In particular, metallurgy is exactly the same. Throughput on the mine is exactly what we're permitted to do. So little tweaks here and there. Capital cost is going to be higher. Operating costs are going to be slightly higher. Revenues are going to be significantly higher. And we're now, or when it comes out, we'll have been 6 or 7 months in construction. And so from a time value of money perspective, it's going to look pretty good.
Essentially, the Capex, I think the old feasibility study was 100 million USD. I mean, what kind of changes, what ballpark changes are we looking at?
Apples to apples is probably, that number is probably close to 140 million. And then you add on working capital, probably another 20 million on top of that, so 160.
And is that, do you include any, you already spent some capital to, develop the decline and portal. Is that including that number? Or?
Yes.
Okay, and sort of all-in sustaining cost here, I mean, are we... do you think it will be around $2 a pound, copper equivalent, or what?
Yeah, if you include the stream in there, we're looking around 180 a pound, copper equivalent, all-in sustaining cost, and that's adjusted for current pricing and operating costs, etc.
Of the 20,000 tons per annum of copper equivalent production, what's the metal split here?
Yeah, that's an interesting question. In the beginning of the year, it was like 92% copper, 8% precious metals. I think we ran this a few weeks ago. We were 82% copper and 18% precious metals. So the gold and silver appreciation has been nothing but money for the project.
Could you also give some sense of the MPV8 or maybe a broad ballpark range at various prices?
Yeah, again, it was run a couple weeks ago using spot pricing and June 30th, 2025 basis. And the NPV, I believe, was around 700 million US, 8% discount rate after tax, using spot. And then Blue Moon was around 400 using Springer, so we're 1.1 billion US. NPV 8 for both of them using spot pricing as of a few weeks ago.
Perfect. And so, where are you now with the construction in terms of how far have you gotten with the decline development?
At Nussir, we're north of 300 meters, and in the case of Blue Moon, we've just started, so we're a few meters in.
And how much decline development will you do before you start, preparing, your first stopes and?
Yeah, it's going to take 1.6 kilometers to get to the Nussir ore body. We're going to set up some drill rigs underground to upgrade some of the reserves to proven, as well as do some exploration and some test mining. So sometime in the first quarter next year, we're hoping to hit that. In the case of Blue Moon, we expect to have a drill rig turning sooner than later at an initial drill bay. Don't know if it's going to be 30, 40 meters below, something like that. And then the main ore body is in a 200 to 500 meter depth at Blue Moon. So looking to fully drill off from underground and do test mining, etc., on that core. But it's a steeply dipping ore body that hasn't had too much exploration below 600 meters and a long strike. So at some point, depending on how things are going and access to capital and valuation, we'd like to do an exploration drive along strike and test some pretty interesting theories at depth at Blue Moon.
Like still VMS theories?
Yep. Yeah, there's a Hecla Greens Creek model there. I mean, that is potential for a repetition, like a faulting and repetition of VMS lenses. Greens Creek is one of the best VMSs in the world. 25 million tons at
the grades are insane.
Yeah, 15 to 17% zinc equivalent. Very high precious metals, good metallurgy. That would be the ultimate target for Blue Moon.
In terms of mill and infrastructure, when will you start ordering long lead items?
Well, the request for packages for the key process plant items that's gone out, and we have acquired a transformer. We expect to be making long lead item purchases over the coming months, and the start of installation on the process plant would be second half of next year. At Springer, we have engineer hired to kind of review all the equipment and determine the designs for retrofit. That's going to be that's going to take the next few months. The equipment at Springer is quite small. At Nussir, 6,000 tons per day. At Springer, as I mentioned, it's been designed at 1,200 tons per day. So there's lots of readily available equipment at that size. And we're talking about adding some new flotation banks, regrind mill, those kind of things. That's not hard to get, either new or secondhand.
What's the biggest perceived risk with construction at Nussir? And I guess you could also say it for Blue Moon and the Springer mill.
In both cases, in both Blue Moon and Nussir, the complexity is around the underground mining. I mean, nothing is novel, nothing is high risk, but every project is riskier in some area, whether it be metallurgy, mining, geology, permitting, you name it. The biggest risk at Nussir is getting the decline, to the 1.6 kilometers. There has not been a lot of geotech along the way, so there could be some surprises. And then an ore body, because it's sediment hosted copper, the drill spacing is quite wide. I don't think there's any risk on the resource per se, but some areas may be a little bit thinner, some thicker. We may have some more geotech to consider in the long run. So I think it's neutral overall, but it's you need to do the work. It's one of the reasons why we're building the mine first. And same thing in Blue Moon. It's the resource is there, the reserves are there, but it's important to do the test mining to determine the actual, in actually Nussir and Blue Moon, the actual mining dilution that you achieve, the mining recovery. Bottom line is, I believe all underground mines that get built should be doing exactly what we're doing. Building the mine first, checking the geotech, mining method is right, dilution, mining recoveries. That has killed so many mines, especially gold mines. If you can get that right, then the rest is normally easy. And but you can only do it if you got access to capital. And so far we have the access to capital. We're doing that. My friends at Adriatic, for example, it just got sold to DPM. When you talk to them about what they wish they would have done, they wish they would have gone underground sooner and kind of fixed or confirmed all these things, which it was a real struggle for last 18 months to kind of ramp up to get to a rate to be sold. Silvercrest Metals is our best example of doing it right. They had the underground mine develop. Basically, when the feasibility study came out, the feasibility study was a home run. It showed the capital required for the process plant and tailings facility. That was what was remaining. They built that, and everything worked pretty well.
And are you comfortable that you will be able to get up to 6,000 tons per day is a lot of underground mining.
Yeah, but it's bulk underground mining with a very seasoned mining contractor from northern Norway. They have built and operated larger underground mines than that. I'm not concerned. Remember, this is a 3 to 4 meter thick ore body that goes for 10 kilometers plus and for 1 kilometer plus a depth. So I'm not really worried about them building enough stopes in order to get the throughput that we need. And mining is not the rate limiting step on construction either. So we have lots of time to get it right.
And at what point will you get more serious with, looking at the expansion potential and actually sort of initiating it? Because obviously you have a large resource. It's large, far larger than what's probably optimal for the mill size.
But let's get it in production first and generating free cash and showing that we can have a awesome operation there, and then we'll consider the expansion, and hopefully our friends at the EU will help us fast track any modifications to permits that we may require.
An exploration here, you're drilling with one rig now. How much are you looking to drill? What are you testing for, and when are you looking to put out assay results?
Yeah, the drill that's turning in Nussir is a directional drill to test the depth extent in the middle of the ore body where we think there's a shear zone, some pooling of liquids, thicker zones, higher grades. I believe it's a 4,000 meter drill program. There was an exploration target in our 43-101 of 10 to 20 million tons at maybe 50% plus higher grade than the resource reserve grade. So I don't expect results until next year. But that drilling is interesting because it will definitely confirm the size potential of the system. Like a few more holes down 1 kilometer plus will confirm that. It will confirm that there are higher grades, within the system, and we'll try to put some more substance around these PGE numbers. So this is the oldest known sediment-hosted copper deposit in the world, and one of the few, if not the only one, that has PGs. There's PG grades throughout all the drill holes. At the top of the system, they're 0.01 to 0.1 grams per ton. But in that 1.1 kilometer hole, there is a 1 meter of 20 grams. So what is going on there? Is that something that is repeatable, or was it a mistake? I don't know. So there's three things that we're trying to figure out here. And there's no reason why the deposit doesn't go down 2 or 3 kilometer depths. Like the Kupferschiefer in Poland starts at 1 kilometer depth, or two, in some cases 1 to 2 kilometer depth. Here, this outcrops at surface. There's no reason it can't go 2 to 3 kilometer depth.
Could you also give us an exploration update, or what you will be looking for, and whether you will be initiating drilling at Blue Moon, the Blue Moon mine, and also the NSG mine?
Well, we expect to have 1 to 2 drill rigs on all 4 projects next year, and most of it from underground. We are doing the planning stages right now on, is Blue Moon going to be 1 to 2 drill rigs underground? The driver for that is going to be the need for metallurgical material for a significant program next year. NSG will start drilling ideally late next year. It is a $6 million program over 2 years. I believe it's 20,000 meters we'll be doing there. At Springer, we're evaluating the program, but we should have 1 to 2 drill rigs next year. There's lots of drilling at Springer, like hundreds and hundreds of holes. We just need to get a better sense of those holes, QA, QC, what we can use, what we can't use, what we have to twin, all those kind of things.
And that's all for the tungsten resource.
Yes. The tungsten resource has molybdenum in it, and it's a skarn. And skarns normally are distal to copper. And so I'm interested to know the copper gold exploration potential there as well. Didn't look at it all. The tungsten was extra in all of this. And so we have some homework to do before we come out with the exploration plan.
Is it molybdenum? Is that bad for tungsten, or?
Yes. Yeah, it's bad for tungsten concentrates unless you have an APT circuit. So we have that. APT circuit, you could produce byproduct molybdenum, which you probably would at current prices. But if you don't have an APT circuit, molybdenum is normally a penalty rather than a credit.
What's the timing of commissioning and ramp up for Nussir, and also what sort of milestones should we, as investors, keep a look at to see that you're on track?
In terms of big milestones for the company, look at closing the Springer deal in December, and the acquisition of another hub and spoke type of asset.
Oh, I meant for Nussir specifically, the construction on Nussir.
Yeah. The feasibility study is the big next milestone, and then it would be the drawdown on the project finance facility, say end of March. Those would be and then hitting the ore body sometime in Q1, and starting test mining. I mean, those would be the 3 things to look for. Ideally, all of them by the end of March of next year. After that, it would be installation of process plant equipment. It would be more like a quarterly update on progress towards production.
And the commissioning Q3 2027.
Yes.
And how long is the ramp up?
It's quick because the metallurgy is super simple here. And primary mineral is bornite. You get mid to high 90s recovery. It's a single copper concentrate. It's coarse crushing, grinding. Not much to it. I believe the ramp up is something like 3 to 4 months.
Get 6,000 tons, or sort of 60% of the that.
Yeah, we will have the underground mine well developed with a stockpile and all of that in advance. Because remember, mining's not the rate limiting step.
Okay, so get the nameplate, before the end of 2027, probably.
That would be wonderful. Yeah.
Let's go to Blue Moon. We all talked about it, but I have a few questions more. So first of all, the Springer mill is closing in December.
That's the plan.
Okay, and I guess to frame it like this, to refurbish the mill, to acquire the mill, and to also actually get into ore and start mining at Blue Moon, to get into commercial production. Do you have any ballpark ranges for the cost of that?
Yeah, we didn't put the purchase price of Springer in the press release on purpose. It will come out in the closing press release. For this conversation, assuming Blue Moon will be processed at Springer, the PEA that came out on Blue Moon in March of this year, which assumed the mine being built, processing plant, and tailings in California, that capital cost was 175 million US. We believe with Springer, if you eliminate the need for construction of a mill and tailings in California, you would have substantial savings from the 175 million, including the purchase price of the mill and, of course, the retrofit of the mill for Blue Moon purposes. So it's if you look at some of the research that's out there, post acquisition, we're trading certainty or potential certainty on production and capital cost savings from buying the mill versus having to build something new, versus the operating cost of transporting the material from California to Nevada. And the conclusions from most of the analysts is it's a wash from an NPV perspective, but it provides a lot more certainty. Like permitting and building a mine in California for the project may be impossible to do, or take 2-3 years longer than it would take to put Blue Moon ores into Springer.
But so essentially, I mean, if you need 50 million of additional, liquidity, this shouldn't be more than 100 million USD.
It's probably around right. Yep.
When do you expect to get in ore and actually start mining? Will you do a bulk mining test first
First and foremost is getting fresh material for metallurgical testing. We are doing quartering of all the historical holes so we can do an updated resource and reserve model, include germanium, gallium, barite, pyrite, indium, those kind of things. And then from this program, we want to do some test mining to determine the appropriate stope widths and dilution. We think long hole open stoping will work very well at this project. And then we'll also get some additional material for metallurgical testing, such as optical sorting, which we may use to upgrade the ores before transport to Springer. So those are key deliverables by the end of next year.
The timeline to production, what is that for Blue Moon?
So we think 2 years from today is a reasonable timetable for the mine development and preparing the logistical aspects, and to get the mill solution sorted out.
What will the metal split? Do you expect the metal split to be from Blue Moon?
Well, when it was run 2 weeks ago, it was 55% precious metals, gold and silver, 45% base, so zinc and copper. That doesn't include things like barite, pyrite, that I think we'll be able to produce with a good market for it in the Western United States, which probably tips at close to 50-50. But it's ranged between, call it 55-45 base or critical metals and 45-55 over the last 8 months.
So you expect that to, maybe and a good to add, I don't know, $100 per ton? Is that too optimistic?
Well, as the gold and silver price have ticked up here, it's just,
I know. I meant with barite, gallium, uranium, all the critical.
My gut feel is it would be 10% more value. So if we're 50 or $500 or $600 rock, 50 to 60 more.
And obviously there's some national skepticism, because there are a lot of companies that talk about, they add other, critical minerals to their equivalent resource or their equivalent drill results. What makes you think that you will be able to process and also actually sell this, conveniently, or economically?
Yeah, it's not really the metallurgy that is the rate limiting step. Normally, it is the value of that product and the market for their product and how much it takes to transport that product. In the case of pyrite, like a clean pyrite, we're right in the heart of Nevada, with all their gold mines around us all over the place. There is a need for clean pyrite as fuel for the roasters in the state. So I would be skeptical unless I was where I was at. And in the case of barite, the main market for barite is for fracking in Texas and New Mexico and southern U.S. And barite is a banned critical material from China. So there is kind of strategic value to that. Adriatic had originally in their flow sheets, I believe, up to the PFS, a barite and pyrite recovery circuit, and they removed it in the feasibility study because the barite had to ship to the United States and it wouldn't make it. And the pyrite, I'm assuming there wasn't a market in Europe, so I think it has a chance, especially the barite.
That's a good bonus. So, but other than that, the core of the resource should be $600 to $700 a ton.
The core
of NSR.
Correct. Really? That's net or recovery. The core 3 million metric ton reserve that Boliden had, which we've been able to redo and it kind of checks out, is well over 20% zinc equivalent net or recovery at today's prices.
Can you efficiently mine that? Because can you isolate that higher grade
that
zones?
Was a reserve. So that is with the mine plan layered on top of it.
Okay, that's great. And what's what's the trucking cost to the mill, and also compare that to rail, and if there's any investment with that, how you will transport it and costs associated with it?
Yeah, we have a logistical study underway. There's a bunch of things that go into it. In Nevada, you can have 3 trailers on a truck. You can't in California. Is there an opportunity to backfill some of the trucks? Are we going to own the trucks? Are we going to outsource the trucks? On the rail side of things, can we piggyback on existing loading facilities in California? How far do we have to go for that? In Nevada, there's a 2-mile siding, which is perfect for us right next to the project, but we have to build a facility to load and offload. So there's a capital cost to it. So it's going to be interplay of OPEX versus CAPEX. And the range is likely $60 to $100 a ton, which we've got $600 per ton material. So that works. My gut feel is maximizing rail. I mean, the extra capital cost is going to be is going to make sense because we're going to be transporting other ores there in due course from other places. So let's make the investment.
Okay, and then you could get down hopefully to $60-$70 per ton.
Yeah, ultimately, I'd like to be around $70-ish a ton.
So you will get up to 1,500 ton per day. That is the target.
Yeah, that's another trade-off that goes into all of this. The 3 million ton core, you probably would be running it more like 1,000 tons per day. So it's what is your cutoff grade? How much can you upgrade the ore at site? What is your transportation cost? How many trucks do you want on the road as well? That there's a social consideration. So it is actually quite complex. My gut is that the 1,000 to 1,500 tons per day is ideal. PEA was 1,800 tons per day, but with some optical sorting and or higher cutoff grade, I think the project with Springer probably is in that 1,000 1,500. The work index on the ore is 8 to 9. It's extremely soft. The tungsten ores are over 20.
And what kind of free cash flow profile? I mean, forward looking, could could be reasonable?
My target is 50 million US a year free cash from each of Nussir and Blue Moon, so 100 million combined.
And the tungsten resource here, you will drill it, but you'll see if you can get some grant money for it. But it's a third or the third priority.
Well, GE had this 10 million ton, 0.5% tungsten resource, plus some molybdenum. I don't know the grade of molybdenum. Then when the 43101 consultant for prior owner did the study in 2012, he had 2.4 million tons. They didn't include a couple of ore bodies. The minimum widths were different, and so that's something we need to figure out. What's interesting is even though the tungsten price has gone up 15 to 20% over the last few weeks, it's still not a level where it makes many tungsten projects in North America economic. We actually need substantially higher tungsten prices to kind of build out a robust business. We're probably one of the more economic ones because of all the sunk infrastructure. But we need to get a handle of what we have. That said, tungsten is absolutely critical for high defense applications, for aerospace industry, and China has a complete control on it. And from what I understand, there isn't a tungsten stockpile in the US. So I could see tungsten doing really well over the next few years to incentivize a few new mines from going into production. And then our Springer resource, whatever we end up confirming, might be extremely strategic. But if I look at the economics of the 4 mines that we have, Nussir is the most valuable, then Blue Moon, then it drops down considerably to tungsten, and then NSG. But I think based on NSG and exploration success and the tungsten confirmation, those two could kind of could switch in order in due course. Or tungsten prices do very well. Maybe Springer's worth more than Blue Moon. So it's interesting. It's good to have multiple assets.
And speaking of which, so can you, if you buy other deposits in the vicinity, can you, if you're going to process the Blue Moon, or can you have separate circuits? How does that impact permitting?
No, it's on private land with almost all the permits in place, lots of flexibility, lots of flat area to add additional buildings. Like this is why it's so interesting for a hub and spoke model. Maybe the tungsten never goes into production, but certainly the value of the permits and the facility and the infrastructure is really why we bought the Springer opportunity.
So you've already outlined. I mean, that's obviously a capital allocation priority. You will have drilling, obviously advancing Blue Moon and Nussir. Any other capital allocation priority for the coming, 12 months?
No, on top of our normal course, I would say what would lead to us spending more money would be exploration success that has been appreciated by the market. If we're drilling and it's not adding NAV per share, or your share price isn't appreciating, then we need to reconsider. And any acquisitions to fit the hub and spoke model.
Other M&A, what's your thoughts on that?
We have so much on the go, Jasper, that M&A is going to be focused on hub and spoke model around Springer, and that's it. Then it's just execution, unlocking the significant value that we have. And the list of acquisitions that make sense as bolt-ons for Springer, we've done analysis. You can count them on one hand. Outside of that, we're trading at 0.2 times NAV. We got to get our multiple up. So we're not for sale, and I don't think we make sense for any kind of mergers of equals kind of thing. It is building out the business. let me rephrase. The first year here has been setting up the business, bringing the key people, the key shareholders, determining the path of the company, and setting up this really neat US strategy. That's what I'm excited the most about in this company. Year 2 is about executing, which is people, 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 people. First year, I forgot, we did financing as well. Second year is going to be people, 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 execution, and rounding out that US growth model with perhaps some strategic money, whether it be the US government or corporates or those kind of things. Third year is going to be starting to produce cash flow. Throughout all of that, throughout those year 2 and 3, I'm hoping there's one of the stories that really captures the attention from an exploration perspective. On the surface, Blue Moon should have the most attractive drill results. Like we're talking about, Adventus El Domo type results, 10, 20 meters of 30, 40% zinc equivalent type numbers. But I can see some surprises along the way as well.
Could you summarize the catalyst for Blue Moon in the coming 12 months?
Yeah, catalyst would be closing on the Springer deal, drawing on the project financing, getting consistent drill results on our 4 projects, including a thesis on Springer, staying on track in execution of construction on the projects, and bringing on one additional hub and spoke asset and one strategic financing deal, whether it be the government or a corporate. That would be the next 12 months.
Perfect. So with that, this question, where do you envision Blue Moon Metals in 3 years from now?
Well, what we're attempting to do here is very rare from a global perspective. You have lots of junior gold miners that have generally the same story. Gold is high grade, capital efficient. People are putting mines into production all the time. It rarely happens in the base metal space. It's rare because base metal assets are typically not high grade, have lots of capital requirements, and have a much smaller investment pool to draw from. We have been able to put together now 4 assets that are brownfield with most or all the permits and that are capital efficient. And so it gives us 3 or 4 chances to actually become a producing critical metals or base metals miner. From what I counted, there's 5 in the world that are my comps. We started the year with close to 8. 3 of them were acquired. So clearly what we're doing is of interest. Most junior companies have no intention of permitting or constructing or operating their mines. This is what we are good at, and this is where we want to focus. So if we can execute on what we have in front of us, we're a rare breed, and we will be $1 billion company. If we don't execute, I think the diversity of our portfolio and the embedded value still makes us do quite well. Like I believe any of the 4 assets over the next few years could substantiate our current valuation. So the downside, ultimate downside protection. But if we execute, the sky's the limit. If we get all 4 in production and got exploration going, we're a multi-billion dollar company. If we get that hub and spoke model going with 1 or 2 additional assets, plus tungsten, plus Blue Moon, I think that can be a multi-billion dollar asset. That's super unique. So I'm super excited how we go. We've I think set ourselves up for success. Now it's a lot of hard yards to see it all together.